Hi, today's Saturday, December 21st, 2024. I'm Jason Shapiro with CrowdedMarketReport.com. I have Chris here today, who's visiting us from New York City. He's one of our CMR active members. Smart guy, equity trader, the whole nine. So this week I was going to do the final series of the year in this Don't Trade Fade series, since it's just about the end of the year. Close enough. Where we took 4 portfolios and we're tracking them against the S&P 500 just to see how they would do. And we started with the Barron's Roundtable. They picked 25 stocks at the beginning of the year. We took 24 of them because one was an international stock and we wanted to just keep it S&P. So we picked 24. So we picked 24 other stocks for other portfolios for the most part. So this one, we took 24 randomly selected stocks by ChatGPT. Give us 24 S&P stocks that you think are going to outperform this year. And here they were. That portfolio actually did real well early in the year. It was doing right with the market as late as August, but it kind of fell off the second half of the year. So it's up 17% on the year versus the S&P 25%. Not too bad, ChatGPT. It's still building its knowledge, you know. This was just random, alphabetical. The first 24 stocks alphabetically in the S&P 500. It's random as you could be, right? Up 9.5%. Versus the S&P up 25. So ChatGPT beat that by quite a bit. Then we had what I thought were the favorite stocks of CNBC when they do their end of year, here's our predictions for next year thing. I took the ones that most people said and made that a portfolio. That portfolio is up 5.8% on the year. Has underperformed pretty much the whole year. Versus the S&P 25, not very good. Worse than ChatGPT. Worse than just picking stocks alphabetically. Not great. Then, of course, we have the source, which was the Barron's Roundtable. These are the smartest guys in the investment world that get to be on the Barron's Roundtable, and these were their favorite picks of the year. Did not do too badly in the beginning of the year, then didn't do too well the rest of the year. As of today, the 21st of December, that portfolio is down 40 basis points versus 25% up for the S&P 500. That's pretty poor. You could have, this is where we say don't trade fade. It's easy to say now since it's flat on the year, but even when it was up a little bit on the year, but let's just take it from now. If you had gotten long the S&P 500 and equal weighted shorts and the Barron's favorite picks, you still got the S&P 500 return, okay? While being completely market neutral. You know, you got $1 million, get long $1 million with SPX, get short $1 million of these stocks, right? You made 25% on your $1 million, which is exactly what the S&P did. And you did it with zero market risk, right? Because you are just as short dollar-wise, $0 market risk, let's say. Market risk is a whole nother definition, but $0 market risk. And you made just as much as the S&P 500. I would dare you, and please send it along if you have it. Find me a long short equity fund this year that was dollar neutral on the market the entire year and made 25% on the year. Please find me that person. I'm dying to find them because I don't think they exist. This would have been the best performing long short, I would dare say, on a risk adjusted basis, this would be the best performing long short equity fund in the world this year. I would dare say. Risk adjusted, meaning that there was no market risk, there was no dollar risk here. And how did you do that? How much research did you have to put into that? You had to buy the Barron's, and you didn't have to buy it. You could have gotten it online for free, gotten the Barron's Roundtable, gotten their picks. That was your entire research for the entire year. Shorted those stocks on January 2nd, bought the SPY on January 2nd, gone to sleep, woke up on Saturday, December 21st, and said, oh my God, I'm the best long short equity manager that ever lived. Is it going to work every year? We're going to find out because we're going to keep doing this. Okay. But it certainly worked this year. Was this a tough year for stock picking in fairness? Yes. We know breadth was bad for most of the year. And if you look, this thing really started to puke, although it was only up about 7-8% while the market was up 22%, but really started to puke recently when breadth really fell out of bed. And that would make sense, right? Tough to stock pick when breadth is so poor. So yes, this year was a good year for this type of thing, but we're going to see what goes on in the future years because we're going to keep doing this. Barron does their roundtable every year. And until someone from Barron's comes over my house and shoots me, which maybe would take another year or two, we're going to keep doing it to track it. Okay. So I hope that that's interesting to somebody out there. I think it just makes the point, which of course is don't trade fade, right? and it talks a little bit about risk and all that. But really what it talks about the most is fading consensus. Okay. That's really all there is to it. This is not a managed portfolio at all. Okay. So anyway, something to think about. I hope you enjoyed that as an end of the year sort of light video. Wanted to follow up on it because if it were outperforming, I would be following up on it and saying, hey man, look at these Barron guys. They're geniuses and we should all buy Barrons and follow them. But even if they beat next year by a few percent, they got a lot of catching up to do, man. They're underperforming the market by 25% in 12 months. How many years is it going to take you to catch up to that? They're not going to ever, I'm not going to say ever. The chances of them outperforming the market 1 year by 25% strikes me as very, very low. So they got a long way to go. They're down 25% to the market to start this experiment. So hopefully I'll be around for a few years and I'll be able to see how they do over the course of a number of years, but they got a long way to go to catch up here. All right. And that kills your returns over time. You know what I mean? When you fall that far behind in such a slow period of time, it kills you over time. So anyway, those are my points. Hope you enjoyed it. Hope you have a great Christmas. If I don't see you before then, I don't see you because I'm on video, but if I don't get to say anything before then, I hope you have a good New Year's. And we will talk again soon. Thank you. Check us out. Please like the video if you like it. Please check us out on crowdedmarketreport.com. We have Substack. We have YouTube. We have Twitter. We got the whole social media thing cornered. So check us out. And please leave questions and comments. And again, happy holidays and Happy New Year. Thanks.